back to the Lion's Den. Let's all prepare to feast on our prey. But before we do, remember this is not financial advice. This is for entertainment purposes only. Traders can and do lose money. That being said, let's get that stuff out of the way and let's get into the topic today. We're talking about your buy and sell orders. So many people are asking about how to get in and how to get out of your buy and sell orders as easily and as efficiently as possible. So we're going to stay with the Webull platform because it's very user friendly. There's the Thinkorswim platform through TD Ameritrade is excellent. It's got the best charts and a lot of the best resources, but a lot of people are using Webull right now because their charts are very, very user friendly, very easy to understand. They offer really good margin, which we'll talk about. TD Ameritrade is generally offering a 2-to-1 margin right now. So if you're trading on, let's say, a $2,000 account, you'll have $4,000 in buying power. If you're trading on margin, that's 2-to-1. And right now on Webull, most people are operating at about a 4-to-1 buying power with their margin. So Webull is excellent if you're trying to get in and out with day trades and swing trades. So anyway, we're going to use them for right now. If you guys want to take a look at the Thinkorswim platform, I can shoot over to there in another video, show you how my stuff's set up in there. I'm not really going to get into any E-Trade. I think I'm not really a fan of their system. Sorry, E-Trade people, don't fire me. Don't shut my account down at least. Anyways, so very simple. We've got our buy orders. We got a buy limit and a buy market. We've got our sell orders. We got a sell limit, a sell market, a stop limit, trailing stops, and we've got our short positions. So real quick, we're not going to do much with short positions, at least not yet, but we'll go over them real quick. Let's say we're looking at a 1 minute interval chart on General Motors right now, ticker symbol GM. GM is, we scroll out, has been fairly constant. A lot of good volume. Their volume's up at about almost 12.5 million on the day. So GM's always a great stock that gets a good amount of price action movement, and I really enjoy trading GM intraday, even swing trades. If we zoom out to a 30-minute chart, we see there's some really good opportunities here to take advantage and scalp some profits. We see some really don't mind these drawings that I had on here from previous times. So we see a lot of good downward pressure, a lot of selling pressure down here. We'd have to go back and look and see what the catalyst was at the time that was causing the downward pressure, but that forced us down under our RSI, under our oversold. We spiked back up over the oversold and dip back down. We hit oversold again. We spiked back up. So really, we're seeing General Motors is such a stable company, such a major Fortune 500 company that it really can't stand to be oversold, at least not for any kind of period of time. I mean, we're looking at maybe 20 minutes at a time that this thing can stand to be oversold. So then we're getting price action on the way back up. So anyways, right now, if we were to zoom out a little bit, we see some downward pressure. We see over the past few trading days, past couple of weeks really, we've got from highs up here, we've got downward pressure. We consolidated with some new support, and new support became new resistance. So we had more downward pressure. We consolidated again. We tried to spike higher. Surprisingly, actually broke through this layer of resistance that we had created. So we would have thought that we would have continued above, especially our 9-day moving average crossed above our 180-day moving average, and we wound up very short-lived. We wound up crossing back down, so there must have been another catalyst. We'd have to go back in and search and find out what that was. So we get the death cross down here where we get almost a falling knife down here with such steep drops, and our 9-day moving average crossing down below our 180-day moving average. So good selling pressure downward. So it shows a pretty good downtrend right now. As much as I love General Motors as a company and their financials and what they're doing, they're moving into the EV space with electric vehicles, and they've been able to fairly decently weather the storm with the chip shortage. Um, for even despite that, the chip shortage is still affecting them and could be a big reason for the downward pressure recently. So, if while we're on the topic of trades, if we were to look at shorts, so basically, if we were to short, let's say let's call this line 59, right where we're at. Let's see, let's call it 59.30. If we were going to take these previous spikes and create a resistance line here and say that these candle tops here have created resistance at about 59.30, we could set a short order to sell 59.30 for the short. And let's say we sold 59.30, we would be saying that we wanted to sell products that sell stock that we did not own. It's a naked short. If we wanted to naked short stock that we don't own, which we would have to borrow from a clearinghouse, and that's on Webull to we're basically agreeing for Webull to borrow shares, and it could be hard to borrow shares depending on how volatile it is, depending on how much free float is out there, but we would be saying that we wanted to short this. We wanted to sell stock that we do not own. So if we wanted to sell it at 59.30, we would come in here, we would short, we would set a limit order because we have a specific price target in mind that we wanted to hit. So we would set our limit order at 59.30, and we would say you can either make it a day, good till canceled. We want to trade in the extended hours. You're going to get a lot of volatility, a lot of movement in the extended hours. So if it's an option for you, I prefer to trade. I always allow my trade orders to go in with extended hours because let's say you wanted to place an order for 59.30 and you thought, you know what, maybe there's a chance. Look at this, down 2 weeks ago, 3 weeks ago, this is down here under 54.12, and let's say there's some really strong downward pressure and we wanted to short this down, say maybe not all the way down, let's call it about halfway down to these previous support and resistance levels. So let's call it 57.30, right? Let's say that we wanted to short it. That's a decent movement. If we see the margin and gap here from 60.45 down to 58, we're seeing almost $2 movements. So if we wanted to set another $2 movement here again, we've got 61.93 down to 59 and change, 59.50. So we're seeing $2 drops, give or take, every time this thing gaps down lower. So if we wanted to set 59.30 as our short limit price, and we want to allow it to gap down lower for us and sell at, we would set this order at 59.30, and then when this order is placed and when it's filled, we would click in and we would buy to close it. So when you short something, you're selling shares that you do not own, and in order to close out that position, you're going to need to buy it back to close. So you're going to set your buy limit order now, and you're going to set your buy limit order at 57.30, look like the magic number. So we're going to leave that time in force. If you want to leave it for the day, I would leave it good till canceled, and I'd leave the extended hours in, and I would just let it ride. So now you're talking about $2 profit per share. If you're shorting, I would say that you're going to need to take bigger positions in that, especially if it's going to cost you a day trade. If you're going to be in and out in a matter of minutes or hours, I would say you're probably going to need to short a big position, which you're going to need to have a lot of capital on hand. So generally, that's not going to be the most desirable way for you to spend one of your day trades. And this is all considering the fact that we're talking about smaller accounts. More than likely, you're not sitting here with $1 million trading account, $100,000 trading account, and I'm trying to help the smaller little lion cubs right now, and we're trying to grow from these small little lion cubs in feasting and getting our protein, getting our profits, and we're going to try and grow into these big nasty lions. Like we're trying to turn from baby Simba into like Mufasa. All right, so basically that's shorting in a nutshell how we would set our limit orders, our buy to close, and where we would set our price targets. And so, conversely here, if we were to, for some reason, think that all this downward pressure was just craziness and we wanted to bet on GM to go up, or let's say we saw some news coming out, GM's getting ready to unveil a new electric vehicle battery technology or something at a new car show, and we want to run with some hype for some pre-anticipatory running, and we would say in the very, very short term, we would say that there's actually a chance in a quick swing trade, we see some higher lows and some higher highs up here. So we would consider possibly seeing a good opportunity to get into a trade. But again, we're going to want to see our relative strength. We're going to want to see us in a position where we have some strength to grow with, some volume to ride. So let's say that we did. We're going to come over. We're going to set our buy order. We're going to set our limit at. We said we were looking for this to break above our resistance lines here at about 59.30. So we set our buy limit order at 59.30, and that is the most that we are willing to pay for that position. So we see 5.30, it starts to cross up to 5.30, and we're going to 59.30. We see it cross 59.30, we're setting our limit orders. Or if you're just getting to the show and you see it hit your limit and now it's at 59.35 and it's got some good volume and it's pushing forward, it's trading above this 9-day moving average, and you just want to get in. You want to get in quick. Well, then you're going to place your buy market order. You don't really care what the price is. You're not going to sweat 5 to 10 cents either way. You just want to get in before this thing spikes up to 61, 62, and you miss out on the gravy train. So basically the differences are here that we're setting a specific price that we want to pay. We don't want to pay more than that, and we're happy with the entry price that we get. If we want to just get in and we don't care what the price is because we just see the volume, we see all the good indicators, and we see this thing going to the moon real quick in a hurry, we're going to set our buy market order, and we're just going to get it done. Same thing with our sell orders. All right, so our sell market order, we see this thing as a falling knife, and it's falling down, and you just need to get out before you start bleeding anymore. You had bought in over here at your $60 mark, and you thought it was you got some confirmation after this bullish engulfing here, and you rode it up into about 60.50, and now all of a sudden you're seeing this hard downward selling pressure. We cross back down under this 9-day moving average, and you just want to sell quick, get it done, get out of it before you start to bleed more. You're going to sell a market order and just be done. If you wanted to set a stop limit order, a lot of people have questions about stop limits. So basically what I'm going to do here is I'm going to set my stop limit at, let's say I bought in at this $60 mark, and I said, you know what, the most I'm willing to lose is say 15% on that. So I'm willing to lose $1.80. I'm willing to set my order down here. That's not a good, we're not going to say 15% because that's too much. It's going to bring us down a little low. I mean, normally I'm shooting for my stop limit orders to be set at about 15% loss. Like that way you're minimizing your loss, but you're still able to take advantage of the gains when you can. So let's just say you bought at 60, you waited for the ride up, and then you got bamboozled with this downward pressure, and you want to just recoup your loss. So you want to get out before you lose it all, before you really take a loss. So you set your stop limit order at let's say $59. So you want to set your stop price at whatever price. Your limit price is going to be 59, and your stop price is going to be the price that is going to trigger that deal to that order to become active. So let's say you don't want to sell at $59 unless it really tanks down here below 60, below 59.50. When you hit 59.50, you start to panic. So let's just say you set your stop price or your act price if you're on the TD Ameritrade app. Your act price would be 59.50. When that price action moves down below 59.50, then all of a sudden this order becomes active and you're willing to sell for no less than $59. So that is a real short, quick, and dirty buy and sell orders. How to get in, how to get out, what's the fastest way in. The fastest way in is your market orders, but they're not always your most efficient when it comes to your pricing, especially if we're trying to be very, very careful on what we're spending and what percentages we're keeping for ourselves. We're not trying to be greedy. We're trying to feast like a lion on some easy prey, but we're trying to be those fat and lazy lions where we're not having to chase it all and trying to work all that much. There's a reason why a gazelle never gains a whole lot of weight, because he's always goddamn running. So anyway, hogs get slaughtered. So if we're going to be greedy and we're going to expect this thing to run to the moon, it's not, 9 times out of 10, it's going to backfire on you. So you're going to wind up getting slaughtered. So take your profits, 15, 20, 25%. If you can get, that's big on option trades. If we shoot over to the options on here, option trades are really where you're going to be able to make your quick 15, 30% and that's where you need to get out. You need to get out on your option deals. We're going to cover that in a later video on how to get in and get out of those. And that's really going to be your meat and potatoes. I mean, if you can make 15% on a trade on an underlying stock position, you're doing phenomenal. That is an incredible move. Those, you can't count on those. So if you want those kind of gains, you need to be playing with the options. But options, there's definitely more opportunity to lose money. It's happened to me a lot. But the more you learn, the more you practice. Paper trade, shoot over here, do some paper trading, and figure out what you're doing first. I would take a look at your options and learn what it means when you're looking at the option contract. All right, learn what your Greeks mean, the delta and the theta. We're going to go over that in another video. But anyway, to close out today, let me know if you have any questions. Like, comment, subscribe. Let me know down in the comments if you have any other questions, if you want me to take a look at anything else, when any other platforms, or you have any questions about your buy, your sell orders, how to short. Be careful with your short positions. We see all the big hedge funds getting screwed left and right. So anyway, that's enough for today. Gentlemen, ladies, have a great day. I'll see you in the next one.